What if I told you you could get a copy of the EdgeFinder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of EdgeFinder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the EdgeFinder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content. Good morning, everybody. Welcome back to another live stream. Happy Friday to you. Hope you are doing well. We've got some some movements in markets here. Oil's lower this morning. Gold and silver also moving lower, and the dollar index kind of chopping around. Meanwhile, stocks, to maybe no one's surprise, almost back to all-time highs pretty quickly here. You can see we had like a 2% drawdown? Yeah, 2%, 2.4%, and now stocks popping right on back up here. Looking like they're going to end out the week decently healthy. Here's the weekly chart for the Nasdaq, still very, very green here. And it's been a while since we've had any sort of meaningful pullback in the indices. So we'll continue to monitor that. If you're taking a look at, lower time frames, you can see here this morning, kind of a rip into the New York session for S&P NAS. I would just say, looking at this chart, I would not be surprised at all if we continue to sort of push back onto those all-time highs. So we'll see where things land here for the end of the week, but Nasdaq, S&P 500, these things look strong. Gold is interesting. Gold is threatening kind of the opposite scenario. Gold looks like it might be wanting to push back on down here. If you get down to your 1 hour and 4 hour charts, I think you very well could see gold make a push back on down to these levels here. This 4,500 level and 4,460 level. And someone asked me yesterday, say, Nick, long-term, are you bullish gold? And the answer on that is, for me, like kind of always long-term, am I bullish precious metals? Yes. But in the short run, I still think you have some difficulties for gold. So let's talk a little bit about my thought process there. If I switch over to gold, you can see here that fundamentals, right? Our fundamental scoring here is a little bit on the bearish side. Inflation statistics coming in higher than anticipated recently. Jobs market data coming in a way that is decently holding for U.S. jobs, which is, of course, a bearish catalyst for gold. So we're kind of in the neutral camp here for the gold side of things. Today, we'll get the commitment of traders data. I'm very curious to see what institutions are doing on gold and whether or not they're accumulating it, selling it, etc. But yeah, we'll keep an eye on that COT data later today. Gold from a technical perspective, if we take a look at some moving averages, we have definitely we've lost the kind of very clean upward trend that we saw for a lot of the last year. You can see price coming down into these areas, every time would find some kind of bullish support pretty quick. Like every pullback was bought by the bulls. If we zoom to the, kind of fresh end of this chart, that dynamic has shifted. And, I'm curious what you guys think in the audience. So maybe I can do a little bit of a poll here. Short term, are you bullish or bearish on gold? I'm going to just put together a poll. You guys can throw your vote in if you'd like. Let's put it right here in the top right. There you go. Okay, so comment the word one, or comment just one or two. If you put anything else on your message, it will not count your vote. The software is pretty specifically sensitive to this. But I'm curious what you guys think. Like, I'm talking more like 4-hour and 1-hour chart basis. You think this thing has more downside to come, or are we getting close to a bottom? Let me know. But for those of you guys who are watching gold, let's take both sides of things. Let's look at like the day traders out there. You know, what are we looking at? And let's look at the swing traders. So for the day traders, I'm kind of torn, because for the day trading side of things, my reaction here would be like pops, I would imagine, get faded, and drops sort of get bought. So I think from a day trading perspective, a couple levels you might want to keep your eye on would be this area here, if you're shorter term in nature, as well as these prior lows. So if you're a day trader looking with a bearish outlook on gold, you also have this level here. We'd be looking at something like this, right? Like a break of this 45.10 level and a break of that 4,500 level. Those could sort of be trigger points for a flush lower. And same thing down here at like 44.60. If you were to see that swing through those lows, could be interesting. Same thing on the upside is if you're watching for like a gold breakout, like if you're day trading, short-term trading gold to the upside, probably looking at these levels here. I think gold's been really choppy here. So if you were to see kind of a decisive candle, something like this, then from the day trader's perspective, maybe there's some kind of things to look at there. But for me, more on the swing trade side of things, let's talk about a little higher time frame. Let's talk about the 4-hour chart and see what we see on gold there. So if I switch over to the 4-hour chart, 4-hour chart, you have some pretty clear resistance overhead at this prior area here. So we'll go 4-hour chart resistance there, 4-hour chart resistance here. And then of course you kind of have this prior low. So for the swing traders, looking at the 4-hour, same kind of scenario. And I think the chart looks a little bit cleaner here for the 4-hour chart traders. If you're looking at this from a bearish perspective, you probably want to start seeing this kind of price action. And by the way, if that were to take place, let me just really quick. So the gold 4-hour and daily chart trend is getting a bearish reading here within EdgeFinder. So if we were to see, and seasonality is getting a little bit of pushback there, we're getting a bullish reading on seasonality. If we were to see price action roll over a little bit more sharply, this could continue to be seeing a more technically bearish outlook. So we'll keep an eye on that, because that could sway us into more of a bearish score. Sentiment and COT are also holding back score from being bearish. So let's take a closer look at that. What are we seeing on the commitment of traders data? And by the way, remember, we get to see institutional positioning. Well, let me take off my poll. You guys can't see it. 1 second. Poll. Okay. Wow. A lot of you guys are also on the bear camp. Okay. So if I'm looking at the COT data for gold, you can see we're getting a +2 score here. Why is that? Well, latest COT report, the prior one last week's, because remember, we get new institutional positioning updated data today, this afternoon. So keep an eye on that. If you're an EdgeFinder user, that data will populate this afternoon. So, okay, so check this out. Latest moves in terms of COT, like the latest report was accumulation on gold, and the overall net positioning is pretty bullish from institutions. So you can kind of see where institutional positioning is leaning more bullish and giving us positive score. And then you can probably understand, just looking at this kind of heat map that we have here, the fundamental score being a -3, inflation data clearly has been higher than expected. If you're kind of familiar with fundamentals, then you know that higher inflation, stronger currency, because the central bank is typically evoked to do something about that inflation, meaning they hold interest rates higher, they reduce, money printing effectively to keep the currency from, inflating away. So that's the typical response. So it's not a positive one for gold. So the fundamental backdrop here for me on gold is kind of bearish. Like, it's not super positive. Granted, institutions still have pretty good positioning in gold. So this is where we're netting out a neutral read for our beloved gold, right? And trust me, I love trading gold, so I don't love when we get a neutral reading, but I also know, and this is important to distinguish. Like, I also know that being neutral on gold for the last few weeks has kind of been a lifesaver for the most part. Like, take a look at the daily chart. This has not been a great trading environment. Now, if you were bearish on gold and you caught this, kind of move lower, or this move lower here, then those have been pretty good. But for the most part, this is not a super trendy chart right now compared to, like, here was a very clear downward trend. That's a beautiful, if you caught that move, like, you can catch some nice 2, 3, 4R trades on there. But it's harder to catch that kind of move when the chart goes like this, right? Anybody here who is a gold trader? I'm just curious. Can you guys weigh in? Like, has trading gold been like more difficult or less difficult recently for you? Let me know. I'm just curious. So anyways, I am keeping an eye on gold from a perspective. I love trading it, but I'm waiting for some more decisive kind of confluence across our factors. Technicals, slightly mixed, with seasonality being a positive. Sentiment and COT, really, its institutional data has been pretty positive, but watch for this move recently, guys. Like today, if we get institutions doing some selling in gold, if we see that materialize in the report today, and when I say the report, if you're not sure what I'm talking about, if you have EdgeFinder under COT data, latest COT report, this updates today. So new information, latest week over week change shows up today in the commitment of traders report. So EdgeFinder will pull that in and it will impact scoring. So, this almost has the potential to be altered today. So we'll keep an eye on it. Okay, let me read some comments, see where we're going next today. Nick, if trend lines were drawn from gold all-time highs, then another from the low at the 200 EMA is shaping up for a breakout, probably to the downside. Fundamentally, there's more against gold. Yeah, and I think, like, just regardless of how you draw your trend lines, regardless of how you, shape this thing up, I think it is definitely poised for a breakout one way or the other, right? You kind of have this kind of action without getting even more technical than that. Like, keep it really simple. Chart's kind of been winding, really coiling, if you will. So we'll see. I mean, I think gold could break one way or the other. I lean to the downside just based on the macro, but with a 0 score on EdgeFinder, it means no trade. Like, it means, for me, like, you do your thing, but that is how I trade, is I use the EdgeFinder's bias in combination with my own analysis and technicals. Why is nobody talking about a possible reprice of gold as part of the deal between US and China? More like a Plaza Accord scenario, but China would not allow its currency to be doubled in a night like Japan. There's always something, man. There's always a fear event that's a reason to buy gold. Always. Like, I had someone yesterday explaining that in the Arab nations, there's some holidays coming up that are going to surge the price of gold due to demand. Or like every year when I don't know when Diwali is that the correct name of the holiday in India? Or there's some holiday, maybe my Indian friends can help me here, where gold is sort of a centerpiece to the celebrations. And sometimes people will say, oh, gold's going to go up during that time. There's always a reason. Gold is always treasured, quite literally. So, but for me, the more sensitive things that drive prices in gold are ultimately going to be interest rates, inflation, the state of the global economic situation. Like, one surge or like a lot of demand. I know it sounds like a lot of demand due to some sort of like holiday or some sort of event, but it's peanuts compared to global macro. like global macro, like if you have massive surges in interest rates globally, that's going to matter to gold more than anything else. Gold is difficult, sir. It consolidates on the daily time frame. Yes, it does. Right now, it is a little tricky. And I feel, again, I feel like perfectly fine having not traded it because there's not really been any great directional pushes on a daily perspective. Like if you've been trading the 1 hour chart, there's been probably some decent moves, especially if you're one to take profits pretty quickly. This has probably been an okay environment for gold. Pound dollar, please. Yeah, so I am short pound dollar. Let's see how it's going. If I go 4 hour chart, pretty much break even on this trade. I do like pound dollar to the downside. I am still bullish on the dollar until proven wrong. I could be dead wrong on it, as with any trade. I always disclaim that because sometimes people will hear me say like, oh, I'm bullish or bearish on the dollar. And they'll come back a week later and be like, aha, you idiot, you were wrong about something. And I was like, well, look, I'm wrong all the time in my trading. Not literally all the time, but frequently I am wrong in my timing or my entries on things, but it doesn't really matter because I'm sort of I'm the type of trader with my style that I'm going for the big runner. And if I don't catch it, then it's not the end of the world. My sizing is small enough that it, is under control. But I do think that the dollar index has some upside. Of course, it is sensitive right now to all the geopolitical headlines. Like yesterday we had, and even this morning we had headlines that the geopolitical tension might be ending. And someone said, well, Nick, why would you want to be bullish the dollar in an environment in which they're talking about ending the war? Well, let me remind you that they have been talking about ending the war since it started. And headline fatigue is a real thing. First of all, people start to get tired of, the changing headlines 24/7. But also, the fog of war is also real. Like and I'm not saying they can't end it. Like I hope they do, and they might, right? But there's this back and forth that is very difficult to truly know what is going on. You hear one thing and then something happens and Iran says the other, or Iran says something and the White House says another thing. Like there is this constant negotiation that's happening in front of us. And so to draw the conclusion, oh yeah, everything's going to work out, it's going to be peaceful, to me, maybe it is. Hopefully it is. But I think that if you're reading the headlines, you are too late to one side or the other. I know that sounds, difficult because it's like if you hear progress is being made, progress can also be unwound very quickly. So when I look at dollar index, right, it's not just geopolitics. That's not the reason I'm long dollar. Well, actually, I take it back. It's part of the reason because inflation materially moving higher than anticipated. That is a large reason as to why I think the dollar has upside. I think that we could see the Federal Reserve stay on hold and actually even consider the possibility of a rate hike, maybe end of this year, depending on how things go. The jobs market has been holding up okay, right? Non-farm payroll was much better than anticipated. I'm not saying jobs are excellent. I'm saying they've been coming in better than expected. The weekly jobless claims this week were okay. Job openings were in line with expectations pretty much. And then inflation has been hotter than anticipated. I wouldn't mind if we saw a little improvement in the PMIs world. Economic growth is more of a bearish signal for dollar right now. And we should be alert that this evening we get the latest commitment of traders data, which could swing the dollar one way or the other. Okay. So my perspective on dollar is I think that it has upside. From a technical basis, we really would need to see this type of move. But I do like this chart. Like if I drop down to 1 hour and 4 hour chart for DXY, like I like this chart. And I think my bullish idea is wrong. It's nullified if we break here. It is kind of validated if we can break and retest and continue. And always there are people that agree or disagree with my thinking. You should not trade based on what I'm thinking. You should trade based on what you are thinking and what your strategy tells you that you've spent a lot of time back testing. If you haven't spent a lot of time back testing and building your own strategy, you should definitely stick to a demo account, because trading is really hard and you have to have a system that you can stick to when you inevitably are going to be wrong at times. So maybe dollar index falls apart here and the deal gets made and things end peacefully, but there might be some obstacles, there may be some delays, there may be some problems that come up. And so if you're waiting on, if you're looking at yesterday's headline and saying, yeah, the deal's going to get made, they said yesterday that a deal's going to get made, how many times in the last few weeks have we heard the war's about to be over and then Iran says, no, we're not going to do this? Or the US claims one thing, Iran claims another. Iran claims one thing, the US claims another. Like, you're seeing these back and forth. So again, throughout all of it, notice how the dollar is still significantly up from when the war started, right? Like, we are still up from when the war started. So we will see. I'm not, my point is, I try not to predict geopolitics because I think it's a really difficult game, and I think it's more difficult than people think it is. If you were somebody who said, I think the war is going to be a quick one, look at oil. It hasn't budged. We are still at elevated levels from the start of the war. Actually, the war started here. Oil is, still 30% higher. That is inflationary. And so that is something to think about, is like, okay, if you are looking at the headlines and saying, well, yeah, see, the war is almost over. Well, what is price action telling you? It's telling you something different. And maybe it comes to an end. Again, I'm not predicting it. It could end today, could end tomorrow. Everything could be all good. I'm not making a claim there. I'm just pointing out that if you structurally just look at price action, it is typically the most leading thing you can get in regards to tracking geopolitics. If you wait for articles to get written and published to the world, that information is old by the time it gets to your screen. If you're day trading, especially. So Sluggy's got a good point here. Exactly. The longer the oil price stays elevated, the worse it gets for the global inflation. It doesn't have to go to 200. That's correct, right? If we continue to be in this stalemate negotiating process, again, even if missiles aren't flying, even if things are ceasefire, but you see oil price stay here for another 2-3 months, that's going to start to hurt. It's already starting to hurt, because look at inflation. Again, we've nailed this down 1,000 times on the channel here, so I know I'm repeating myself a little bit, but with that higher inflation, it bumped up more so than even was anticipated. We had a producer price index number at 6% versus 4.9% expected. That's a pretty big beat in terms of what we were expecting. So oil needs to stay below 90. I would agree with that. Like, I think if you see oil break back down beneath, well, really, I would say like this level here, whatever that is, like 88. From a technical basis, that has been 88 to 85. That's been the spot where bulls just back up the truck every single time, it seems like. So I think if you want to talk about like a technical failure from oil, I think you're looking at like, can we see closure down in the low 80s? You see low 80s, then yeah, I think I'd probably switch camps and think, okay, price is materially failing here. But right now, you're just consolidating at what is painful levels for inflation. So we'll see. We will see. Reminds me of the 90 for 90 days analogy you shared a while ago. Yeah, that's actually a good point. I hadn't thought about that. Let's actually do the study here really quick. How long have we been above $90 oil? 77 days. Interesting. So this person, thank you for bringing that up, Yoshi. So very interesting point. I heard that. It's not my thought process, but it was like I can't remember exactly where I'm referencing it from, but I heard someone else talk about studies done in regards to oil prices remaining elevated for, it's not necessarily just like a shock and then it drops. It's elevated for a period of time, because what happens is, if gas prices are high for a week, people can stomach that. They're like, okay, we'll just, that's fine. But if oil prices are high for a summer and then another season, that starts to whittle away people's purchasing power. So yes, I think the duration of oil being at this level, it becomes damaging after a point. I think it does rear, its head in the form of higher inflation, which hurts the consumer, gas prices. So yeah, that's kind of that's my concern, and that's why personally I have a hard time buying, stocks and risk assets at these levels. I mean, my friends sent me a text yesterday, said, "What happened to the Bitcoin kind of alpha you used to be able to get?" This is such an interesting point, and it tells me something kind of concerning about Bitcoin. Like a couple of years ago, if the Nasdaq was up 10%, it felt like the Bitcoin chart was up 30, right? Look at the absolute breakdown when we compare. I'm just going to put QQQ on the screen for a second, and I'm going to compare it to Bitcoin. So look at this. This is so interesting to me. Like, you used to get the scenario where, again, let's go from like last year. Like last year, when the market bottomed, Bitcoin, gained like 46%. The Nasdaq gained like 30. And there's also been even more extreme examples where, here was a time where, let's just look at like this period of time, right? Here's a time where the Nasdaq gained 15% and Bitcoin gained 65, right? There's been periods of time in history where Bitcoin has been just an alpha delivery system for your portfolio. Look at this, right? This is back in 2023. Markets ripped up 28% for the Nasdaq, but Bitcoin delivered you 100% gains. What happened, man? Like, something is concerning with Bitcoin. Like, the market is telling you something here that is concerning. I'm just curious. Let's do another poll. I've been loving these polls here recently. Bull, bear. Let me know real quick if you guys want to vote on this. Type 1 in the chat or 2 in the chat to vote. You can see it pop on the screen right away, I believe. What do you guys think? I mean, has Bitcoin lost? Is this the time to buy Bitcoin? Or do you think Bitcoin has lost something? Like, my concern here is like, okay, what's going on where you have these, I guess in the recent rally, Bitcoin has done okay, but like, look at this. Nasdaq from the lows, 26% gains. Where's the 75% gains for Bitcoin? Like, what's happened here? It's still correlated. Like, you can see very clear correlation. Bitcoin rallies with Nasdaq. But it's not even matched in terms of gains. Like, this is got to be one of the most frustrating times in crypto history, I feel like, because at least in history, when the stock market dropped, Bitcoin dropped harder. When the stock market rallied, Bitcoin rallied harder. Now you've just got this frustrating circumstance where if the market drops, Bitcoin gets destroyed. And if the market rallies, Bitcoin underperforms. Like, that is one of the most frustrating crypto dynamics I have seen. AI has the people's attention. That actually might low-key be a very, very good point. Like, maybe the crowd's over here in semiconductors right now. Right now, it feels like, if you're running hot with the AI stuff, who needs Bitcoin? And Bitcoin suffers the double-edged sword with Bitcoin is it is the people's kind of risky asset to play with. It's a speculative thing. The problem with being a speculative thing is that a new speculative thing coming along does steal your thunder to an extent, right? Like, if the crypto crowd is busy chasing semiconductor stocks or chasing GameStop, like, there is a competition, I guess, for crowd money, like for the retail trader chasing certain things. But yeah, it's a circumstance that's difficult. So 63% of you guys said bearish on Bitcoin, 38% said bullish. Very interesting. I'll just give my take on it. I feel like with Bitcoin, I like to trade it, but again, that lack of conviction, the underperformance from Bitcoin makes it hard for me even to love the idea of trading it right now, because I'm looking again, if I'm thinking stocks could move higher, which right now I'm kind of in the more cautious to bearish stance on stocks, like I think they're due for a pullback. Then I want to be extra careful with something like Bitcoin, which again seems to get crushed in a down move and underperform in an up move. Very frustrating dynamic. And again, I like trading Bitcoin. I've traded Bitcoin actively for quite some time. Just lost its charm here recently, it seems. Maybe it regains it. One more chart here really quick, guys, and then I'm going to throw it over to our next show host. I want to take a look at just on the subject of Bitcoin versus gold here. We have been noticing that, Bitcoin to gold ratio, this is sort of a risk on versus risk off gauge tool. It basically, this is a 20 period moving average. This indicator simply divides the price of one Bitcoin by the price of 1 ounce of gold over time. If the ratio is trending up, it shows Bitcoin outperformance. If it's trending down, gold outperformance. Typically, Bitcoin outperforming is considered more of a risk-on environment typically, why do we have typically written twice in that sentence? I got to fix that. While gold outperforming is considered more risk-off. So we are watching this chart because we're seeing a little bit of it tapering off. If you start to see, this thing continue to trend lower, that could be a signal that risk-on maybe finally materializing a little bit. Anyways, guys, before we throw over the show to Marco, just a heads up, remember we are doing our Memorial Day sale right now. Everything is 35% off. If you want access to EdgeFinder, if you want access to Stockbox, if you want access to our VIP signal service, all of it is currently in super discount land for 35% off. Also, we are offering to set up payment plans for people who are interested in that. So what that means is you can split this up into 3 to 4 payments now with our support team. So if that is something that you are interested in exploring with our team, we'll drop a link here in the live stream chat to where you can set that up now here. So click this link. It will connect you to a real person, not a robot, from our team who can get you some information about setting up the 35% off discount on a payment plan if that is something that you're interested in. It makes it super cost affordable and you get the EdgeFinder today. So if you don't have access to it, now is a wonderful chance to pick it up at a low cost and split it up into payment plans if you need to do so. With that said, up next, we have Marco from Marco's Trading Journey taking a look at some charts that he's trading now. Stay tuned. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So usually it's Alan after Nick, but today we have switched segments. The main reason is that I'm trying to watch the Waller speech. So if you go to, let's make this a bit wider. If you go to Financial Juice and we go to today, you basically have Fed Waller speaking. So it's supposed to happen at, I think it's 10 a.m. Eastern Standard Time. And his speech should give us more clarity on what the Fed is thinking. So is Fed hawkish, neutral, or dovish? Waller is kind of the player that tends to influence the Fed to flip in a specific direction. So if he flips super hawkish, or if he stays committed to rate cuts, well, that gives us an idea of basically the whole Fed. That's why I'm going to watch the speech. I think it's actually through Zoom. So he's speaking in Germany somewhere, I think in Frankfurt, and it's going to be streamed via Zoom. Before we get into the analysis, I want to mention, if you want to participate in the DNA Funded giveaway, you basically need to first apply for the Discord. So first, go to this jot form, I will post the link right now. Okay, so go to the forum, join the A1 Discord, and then in the A1 Discord, you will find a channel called Giveaways. Okay, so the channel is called Giveaways, and in there you have another form. Now that form actually gets you into the DNA funded giveaway. So I'll grab all of the entries, I'll put them in the wheel of names, and then we will find a winner. It's going to be a 10K one phase account, by the way. Okay, so 10K one phase DNA account. Watch list. As far as my watch list goes, I have still the same things. So I have a buy position on gold. I have a sell position on the euro dollar. And this one is, it's working okay. It's working fine. Now, something that I will aim to see if Fed Waller flips dovish, if he says something along the lines of, this inflation is only temporary, and I think they call it transitionary inflation because of the Middle East conflict, and we're still looking to cut, well, I'm definitely going to cut this position. I'm definitely going to close this position because I think the dollar could lose a lot of strength if this speech comes out dovish. Now, if this speech comes out hawkish, well, then maybe adding another position, such as, for example, GU. I think GU is not so bad to sell. Also, it's getting a, let's go to the EdgeFinder. It's getting a bearish reading, so GBP-USD. Let's take a look, GBP-USD. Yeah, bearish reading -8. So if we get the hawkish speech, then I'm maybe gonna execute the sell position on GU. So then I would have EU and I would have GU running as well. It would be kind of double exposure on dollar longs. Now, the base case, the part that will most likely happen during the speech is that he's basically neutral. So that he says if the Middle East conflict persists, then we will need to adjust the rate. If the conflict dies down, we will have to cut. And that's kind of a very neutral sort of stance. And that really doesn't give you a lot of clarity about the future. That's basically the base case, as they call it. So yeah, if there's anything super important from the speech, I will make a write-up in the A1 Discord. So if you're not already in the A1 Discord, I highly urge you to join it. Also, you can consider becoming a premium member, get access to all of the trades that from the mentors and all of the knowledge from the mentors. And also, as a free member, you get access to these DNA funded giveaways. So I'm going to mention it once again. If you want to participate in the DNA funded giveaway, join the Discord first, find the channel called Giveaways, fill out your information, and you will get entered in. So, euro dollar working okay. Nikkei starting to fly higher. So I didn't get in the end. The reason I didn't get in is I was expecting a bit of a risk off week. I was expecting for the markets to start pricing in Fed rate hikes, which of course would be bearish for equities. So yeah, decided against taking a stab on the Nikkei. As it stands at the moment, next week, if we pull back to the 20 MA, if the EdgeFinder flips bullish, I don't think it's bullish right now. So let's take a look. Oh, it is. It actually is. Okay, that's fine. What about the Nasdaq? Neutral. So for the Nikkei, I would be happy to buy around the 20 MA. But for the Nasdaq, I wouldn't be a buyer at these levels. Okay, I would probably look for a pullback to the 20 MA unless this speech turns out extremely dovish. Well, that means I could maybe take a short stab long on equities. So quickly buying the Nasdaq, holding for maybe today and Monday, or maybe for a couple of days. That could be something, but usually for my swing trading positions, for the positions that I mostly take, like 95% of my positions are longer term and swing positions, I would need a pullback to the 20 MA as far as the Nasdaq is concerned. So for the Nikkei, I already did like this level, but decided against taking it. But for the Nasdaq, I would need a bigger pullback. So that's the watch list. It hasn't really changed at all. I'm looking at the same things. I think I could get into more positions next week. As it mentioned at the beginning of this week, for this week, I was planning to be more patient and just and just holding my positions. So for the next week, we may see a bit more opportunities out there. Now, if we run through the asset classes, equities seem to be rallying. So Nas, S&P, all of them seem to be pretty bullish. Dow Jones, Russell looks nice as well. The DAX is, of course, looking flat overall. FTSE looking flat as well. Looks like the most concentration is in the United States. Of course, everyone wants to participate in the artificial intelligence race, so it's not strange to see. I think they call it US exceptionalism. Basically, when all of the money from all over the world goes into the US, into tech stocks, into the Nasdaq, they call it US exceptionalism. And this is what US exceptionalism looks like. So Nasdaq, S&P raging near all-time highs, DAX, FTSE break even, flat, and corrective. Metals market, so I'm in a buy position on gold. I'm not looking to touch silver, copper, or platinum. Crypto, I'm not sure. One thing that I noticed, which Nick mentioned as well, the Nasdaq is rallying. Bitcoin is staying pretty flat, staying pretty corrective. So that's, of course, a bearish sign. And at the moment, I'm being patient on Bitcoin. It's not something that I'm really super happy to get in. I did take an initial stab at it. There wasn't a lot of follow through. Managed to catch a winner in the end, but again, just a push up and a retrace. Now the Nasdaq is going up near all-time highs, while Bitcoin is, of course, doing pretty much nothing. So that's concerning. That's concerning. Then you have currencies. So currencies, I think that the story for now is still buy the dollar, moving into possible hawkish Fed, possible higher interest rates as well. So selling EU, selling GU, buying USD CAD, that's another good position. Or although this one is already flying, so you would need, or I would personally need a pullback to the 20 MA. I think Alan is looking for the same thing, so he's looking for a pullback to the 20 MA as well. Price looks to be a bit overextended at the moment. What else do we have? Well, pound Aussie, I would be a seller because I think the Aussie is a strong currency at the moment. I think the pound is pretty weak. And also, let's do the giveaway now because I can see that Alan has joined and he will be joining the stream in 2 minutes. So let's do the giveaway. Today is the 22nd of May. Let me grab all of the entries. 22nd of May, 22nd of May. Okay. So let me copy the names. Go to the wheel. Paste, spin. Let's see. Caleb. Yeah, Caleb A, congrats on being the winner. So I have your contact information, and after my segment ends, I will send you a link for a free 10K one-phase account, right? And if you're looking to get funded, I want to remind you guys the code A1Live gets you 25% off any DNA funded challenge. Okay, so A1 Live, 25% off. Check it out. And okay, we have Alan. Awesome. Hello.
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 Can you hear me okay, Marco?
Yep, it's fine. It's fine. Are you traveling?
I am in Houston. I had a family member's graduation last night. So I'm here at my grandparents' house.
Awesome. We can hear you fine. So everything is working as it should. How are you doing today? Moving? Are you looking at the markets, looking to take anything, or kind of winding down because it's Friday?
Not looking to take anything. If anything, I'm looking to offload the Aussie basket positions that I have. So that's one of the things that I'm looking to do. To the point there in the chat, I was monitoring that, but it seems like the priced in nature of the Australian dollar has been already priced in. Yields have been somewhat flat today. I mean, they're lower today in Aussie, but they've been range bound for some time there. So looking to offload that if yields start to drop lower in Australia. Also, too, they had employment numbers this week, earlier in the week, that didn't look too hot. So not, that's not a good catalyst there for Australia. And also, too, the recent RBA speech that they had said that they are looking to fight inflation by any means necessary. So that's very hawkish there. But then they also did flag some warnings about growth concerns. So I think when you are looking at the holistic view of Australian dollar and you include growth and inflation, Australia definitely wins on the inflation front, but the growth story could definitely hinder it, similar to like a Europe or a pound, right? So I think when it comes to on a relative basis, which one's performing the best, I would say the US dollar. So I'm looking to offload that Aussie basket. And then hopefully I can get some kind of an entry point there on dollar CAD. That's one of my main points.
Yeah, absolutely. So you're looking to cut Aussie positions by the end of today?
We'll see. We'll see what happens today. But it's something that I'm actively looking to do maybe next week as well.
Cool. Yeah, me personally, I'm looking at the Waller speech in like, I think 20 minutes. And basically the problem with these central bankers is if you listen to the speeches, base case is often completely neutral. So all of them mostly say, if the Middle East conflict persists, we will do the appropriate measure, which is to hike. If the conflict subsides, we will cut. So you never actually know exactly what they're thinking, but sometimes, I think maybe 15 to 20% of the time, they kind of give you a hint, no, we're looking to cut, or we're looking to hike, like this inflation seems too persistent. So that's something that I'm waiting for today, and that should give me more clarity, to be honest, because that Waller guy, he seems to be carrying a lot of weight when it comes to swinging the Fed left or right. And I think most committee members will probably share his opinion, since he has been pretty neutral and even hawkish in the past. But for me personally, I'm still focusing on buying the US dollar. As you mentioned, that seems to be the best approach at the moment. So I'm in a euro dollar short still, and I'm looking to possibly take GU, because GU is kind of at a nice level when it comes to the 20 MA. Also, EdgeFinder is bearish on GU GBP USD. Yeah, bearish on GU, which is another, of course, added bonus. And USD CAD, I think, is running away from us. So you're looking for a pullback to let's say, I think you mentioned 1.374, something like that.
Yeah, 1.374. I'm even willing to take 1.375. That's where that 20-day moving average lines up. Also to the top end of that range. That's kind of what I'm looking for as well. I do like the story for euro dollar shorts. I mean, you're in a great spot. So, if I were you, man, I'm kind of jealous in that front. So I would hold on to that thing, and then look to add to GU. GU is also lined up right there with that 200-day moving average as well. So that's very interesting to see. It is in the midpoint of the range, so I don't like that. Me personally, I would wait for some kind of a deeper retracement. But again, the 200-day moving average is a very solid level of support or resistance. It's very well looked at in the market from a holistic approach. So it's good to see that as well. When it comes to the dollar, I'm kind of just looking at it from the lens of the consequences of the war, what's going on, obviously the inflationary pressures. I would say even if the war ends today, right, assuming that, it still takes time for inflation to pass through. And Nick was talking about this earlier as well, but oil has just been elevated for a long period of time, near that 100 handle, which is very problematic. So it takes a lot of time for oil to really pass through. For example, we take the effects of tariffs, right? In the last speech, Powell's last speech, he did say that the tariff pressures still haven't passed through entirely yet, right? And that was all the way last year. So it's going to take some time. So I think it's going to be a real pressure point. I think a big pop in oil and then a quick pop down is very different from a pop up in oil and then it just stays flat for a month, 2 months, 3 months at a certain level, right? That's very, very bad. So I think from that lens, I think that the dollar will probably be the one with the higher yielding currency, but also too, it's more resilient as well.
Yep. And of course, this week, a lot of back and forth between Trump, Iran, and deal, no deal, possible deal. I'm not seeing any concrete evidence on that. Maybe, Alan, you saw something else. But the last one was from Rubio. We're not there yet, which I mean,
Right. And then yesterday we saw it was all good and dandy, right? So that's why I'm like,
yeah.
I'm trying not to I'm not even considering the headlines. Like literally, I'm just trying to look at the macro fundamentals and kind of look
Yeah.
at it like the hard data. Right. Hard data would be the guide.
Is it the best to just close financial juice for the next couple of months and just focus on the data, just focus on the EdgeFinder and the Forex calendar?
Financial juice, it has a purpose. In this moment in time, it's entertainment. So I'm actually very happy to just see them things go back and forth. And maybe every now and then you'll see something materially concrete, but for now it's serving a purpose as entertainment. So I'm happy with that one.
Yep. And to be honest, I'm happy to see equities raging up again. So they just seem to be super bullish. Nasdaq close to all-time highs, S&P close to all-time highs. So the story there is really, really good. Let me just put them up on my screen. So yeah, Nasdaq again touching those all-time highs. Didn't really produce the pullback that I wanted. I wanted to for the Nas to hit the 20 MA. Didn't happen this time, but I'm happy it's going up. I'm happy it's moving. The worst part could be if we get another consolidation like this one. If this happens, that would be sort of the worst part. But if it's going up, if it's going down, we can of course make percentage. So what do you think? Was this the correction? Is it now time for ATH and we're back to artificial intelligence? And also I saw not OpenAI, but SpaceX is going to be a massive, massive valuation. So I know you asked me yesterday, the SpaceX IPO, could it have a massive impact on the market? And I was like, no. But I checked the numbers and the numbers are absolutely huge. It's apparently going to be the biggest IPO ever.
In the trillions.
In the prospectus that they give to initial investors, they invented, I think, 20 trillion of value out of nothing. They basically mentioned we're going to have a moon colony, we're going to have something on Mars, we're going to do a lot of mining on the moon, and we're going to do this, we're going to do that. But they haven't even sent humans to the moon yet, as far as just SpaceX goes. So it's super crazy. I don't know who the hell will want to buy into such a fake valuation, because their actual balance sheet is negative. So they're losing money every single year, SpaceX as a company.
It's like 3 companies in one or something like that. I think there'll be a lot of upfront euphoria and appetite for that company. I'm sure it's going to really boost the Nasdaq, right? It's like you said, it's $1 trillion, more than $1 trillion valuation upfront IPO.
Yep.
To answer your first question, is this the pullback? I don't think so. So I think we probably will see a little bit of a bump. I don't know how big, how small, from the IPO there on the Nasdaq, but I think what we saw here recently is not the pullback. I think that markets are completely ignoring, and they're hoping that the war is ending soon. Sluggy said it best. The end of war narrative is pretty much priced in, right? So if you just look at the stock market, they're pretty much pricing in the assumption that it's over with, but it's not, right? Clearly it's not. You still have oil elevated above 100. Yields are still sticky at the top. So I think the higher it goes and creeps up, the more vulnerable and sensitive it gets. So I just take a cautious approach. I'm like, this to me is like a warning sign. I would be like, you'll know when the pullback is in.
Yep. And I also got a message from a trader. He said, Marco, the stock market is so expensive. Compared to the bonds market is getting more and more attractive, because you're buying stocks at these crazy valuations, like 30x or 35x from the earnings, I believe, or something like that. And essentially, bond yields are creeping up higher. So if you look at, for example, let's bring up the 10-year, even the 2-year, 10-year is creeping up higher. And as an investor, you're getting more bang for your buck if you just go to bonds. So that phenomenon is starting to happen, where the money would rather be parked into bonds compared to the stock market, which is at these crazy valuations. Now, of course, the earnings could catch up to the valuations in 10, 20, 30 years if the artificial intelligence is actually so revolutionary, but that's a big if. So that could also take away some steam, some strength out of the stock market and bring it into bonds.
Yeah, I mean, if you're an investor and if you're an investor, you're looking to invest, you have no money invested, but you're looking to participate. You're either going to invest in a really expensive stock market that's very risky up there, or you can get a long duration bond that's paying you 5% risk free. You don't have to do anything, right?
Yep.
So,
Yep.
you can do it like that. And one thing we were doing at the bank, whenever we were at, higher, we were offering higher yields via CDs and bonds and stuff like that. People get scared about tying up their money for 30 years, but you can also do like a shorter duration bond and then just ladder them up. And then you have some form of liquidity. So you're getting higher yield and still have some liquidity aspect as well, which that's kind of like the thing that people don't like about bonds, is that you're tied up there and you're locked in. But you can be creative there and still get higher yields, risk-free, and have some sort of liquidity. So I think there's going to be like a real like pivot into probably something like that, especially if yields stay elevated for a long period of time.
Yeah, and you can actually borrow against your bonds. So Ben Mala, who's a YouTuber, he basically does real estate. He mentioned that he has a lot of money parked into bonds because at the end of the day, he can actually borrow against that money. So if he has 10 million in bonds, he can then say to the bank, look, I have 10 million, but it's in bonds. Let me borrow against it. And he's able to do that and then invest, I don't know, 50 million from the bank, or let's say, okay, 20, 30 million from the bank into real estate. So like, people hate on bonds, but bonds are actually pretty good.
Yeah, I love Ben. Actually, I'm planning on having a call with him because we're gonna do a multifamily deal very soon. Like, how he does the consult with Ben stuff. We're gonna consult with him to see if the numbers make sense. But yeah, I mean, very, very true. And then you have different kinds of bonds, right? Like Ben does a lot of muni bonds and geo bonds where they're tax-free. Right? So for people that are very fluent, you can also take advantage of a higher yielding asset right there for tax-free, right? So I think that there's going to be a real need for bonds, or like a real appetite for them, and then that can actually hurt the stock market as well if money is favoring, a certain asset class.
Yep. What do you think about Bitcoin? It's not really moving right now. So we know that there should be a correlation between Bitcoin and the Nasdaq, but Nasdaq raging up, Bitcoin staying flat. So do you think it's just another case of lead lag, or do you think artificial intelligence is so interesting and so enticing to invest into that people just don't have any money left for Bitcoin?
Yeah, I didn't think about it that certain way, but someone in the chat said that, the hype is elsewhere. It's in AI, it's in semis, right? Which makes a lot of sense, right? Especially in this current modern market where people like to flock to the best thing. Bitcoin is just not that thing, right? I also think too, I've said this before when I first started coming on these streams, but I think of Bitcoin as a luxury asset. Like, it's not something that needs to be in your portfolio. Like, usually you have the traditional one would be like a 60-40, 60 stocks, 40% bonds. Now it's more like 60-20, and then some like metals and stuff like that. But Bitcoin is not something that you need to have in a portfolio. So I think Bitcoin is one of those things where you have extra money, you can go ahead and start playing with Bitcoin. And the economy right now, where we've been at with higher rates and everything like that, the consumer or the everyday person is a little bit more restricted. So I think they have less money to play with Bitcoin. So that's kind of my thought process there.
Yep. I do agree. I'm going to have to leave you here because I need to get prepared for the speech. But thank you, Alan, very much. This was really interesting. I'm looking forward to our call or stream on Monday, and I'll update you if I find anything interesting. And also, if you get the call with Ben, definitely let us know how it went.
Yeah, we're excited. We're excited. It's only like 15-30 minutes though.
Yeah, but it's still a lot of value, I'm guessing.
Yeah, well, awesome, man. Thank you so much, and we'll talk next week. And yeah, for sure, update me if you see anything interesting from the Waller speech.
Sure. See you. Goodbye.
All right, man. Take it easy. All right, guys. So if you guys can send some stuff in the chat, there are any chart markups that you want me to go ahead and look at, I'll go ahead and do so. I do have the chat pulled up on a different device there, so you may get lag, but I definitely do want to address anything that you guys have. So feel free to drop that. I'll do my very best to answer it honestly and give you my best opinion on that. But we'll go ahead and start off here with the dollar index. We are seeing that this level of resistance may be holding, maybe not, right? It's very contingent on what's going on with the yields and oil. So in my personal opinion, I think that regardless of the war ending soon or not, I do think that the dollar index is positioned to go higher. So it's either going to be a break and retest from here, or you get a pullback into some moving averages. I see the 98.5 right there lined up with that 200-day moving average. That would be an attractive place for me to buy some dollars. So, and my thought process with that is, right, we have higher oil, Higher oil means higher inflation. Higher inflation means higher yields, and higher yields means that the Fed may be more positioned to go ahead and hold rates or even hike rates. Right now, the Fed is looking to hike rates as early as December, which was the complete opposite of what we were looking at the beginning of the year. In the beginning of the year, we were looking at 1 to 2 rate cuts. Right now, we're going to 1 rate hike. So very opposite end of the spectrum there. So that's kind of my thought process there on the dollar index. That will definitely, help its yield advantage against its relative peers. And even if the war stops today, right? Let's assume that the war stops today, at 9:01 my time, right? You still have to let inflation pass through and all that stuff. You can't just, reactively just start cutting rates aggressively because you don't know how long rates are going to be sticky for. So I think that's why you do have some real appetite there for the dollar index. I like a pullback, like I said, into 98.5. One of my targets would be, 100.5 level. And then ultimately, I would like to see what happens once we get to the upper end of this channel. If we were to get to the upper end of this channel, then I do think profit targets could be up into the 102s, 103s, 104s. At that point, we'll know kind of where the Fed's leaning, if they're starting to get more dovish or still more standstill, whatever the case may be. But that's kind of my thought process. So breaker retest or a pullback into the 98.5 on the dollar index. And then the two vehicles that I'm looking to participate with that in is either short euro dollar or long dollar CAD. So euro dollar, I like it. It seems like it's breaking out off of the support zone here. So the play I would go would be a pullback into this level again. So we probably break from here, retest back into the 1.165 or even up into these key moving averages. And then I can participate euro dollar short. Or my favorite one would be dollar CAD. Now, the only dilemma is that dollar CAD has already ran from us. So the pullbacks, I don't know if they're going to be shallow. I don't know if they're going to be deep. Maybe we'll see, right? The market has been very volatile to positive headlines. So we didn't see that today, this morning. In fact, Rubio said that we're not there yet with the war in Iran, but I have noticed that early in this week, whenever you do get something positive, you do get some immediate softness there in the dollar. So maybe we get something positive, and then we can get some kind of a softness in the dollar, and maybe that presents a pullback in dollar CAD. That's kind of the way I'm approaching it here. We are getting close to that 200-day moving average as well. So maybe that is some short-term resistance. Maybe we get some profit taking there. Who knows? And then we can get a pullback in dollar CAD and take it to the upside. As far as an entry goes, anywhere within this red channel, I'm looking to participate. And then stops right below structure, right below this 20-day moving average. What is that, 20-day or 50-day? Let me see. Which one is it? I think it's going to be the, let's see. That was the 50-day moving average. Okay, so that's the 50-day moving average. Yeah, so we'll pull back into that level. I'll be very willing to go ahead and take that. Let's go ahead and see. I see some comments there. Pound Kiwi shorts, euro dollar. Fed Waller said, I don't think the Fed should consider hikes in the near future. That's very interesting. So that's very dovish, right? That's very, very dovish, I would say, coming from him. Look at DXY. It's breaking high. Yeah, let's see. Let's look at DXY. We'll see. We're still within that level of resistance. So I'm going to be very cautious there. But again, my thesis, my thought process is that dollar index higher. So I'm willing to participate in either scenario, whether you get the break and retest or you get a pullback into here. So I'm good either way. I just need to see the technical confirmation. I don't want to just blindly buy here, because if I buy here, then there's a possibility that I get the pullback and then I'm in unnecessary drawdown, versus if I just be patient and wait for like a break and retest, I know that the structure behind this is looking solid, and then I can try to avoid any drawdown and go with the structure. So that's kind of my thought process. I'm long Aussie CAD until AU yield stay elevated. If it starts to break, I'll cut the trade. Awesome. Yeah. Yields are, I'm kind of in the same process too, man. So that's why I'm like not ready to pull out just right now. Yields are kind of holding steady. In fact, look at this, right? Yields have been flat for some time now, and the Australian dollar is still holding up quite well. So it's like a hit or miss there. But yeah, unless they materially break lower, then of course the trade's probably going to start to unwind. But they're doing okay right now, so I'm not any worry there. And I'm also getting some pretty great positive swaps. All of them give me some pretty good positive swaps. So I'm very happy. Even if I break even, I'm still in the win. And that's the beauty about Forex, is that you can make a little bit of income there even if you break even. Let's see, pound Kiwi. Let's look at pound Kiwi from the top of this page. I know the pound dollar is getting some pressure there when it comes to the reading. Let's do pound Kiwi. -6. Okay, so it looks great there. Let's go here. Let's look at the structure. Pound Kiwi. Awesome. So we are kind of trading up higher there, which is good. We could be heading into some resistance here. We do have that 200-day moving average there lined up as well. Maybe you can draw this a trend line as well right here. If you just move this one down like this. Again, trend lines are subjective, so take this with a grain of salt. In fact, I rarely use trend lines. I just use it for visual purposes. But yeah, so this could be a good area to go ahead and short that for sure. Pound has been under pressure. You do have that political stuff going on over there, which makes it not as appealing. And then, yeah, so, and then you do have a little bit of growth pressure as well with inflationary pressure. So that's not good, right? That's, you know, if it happens for too long, that can be stagflation territory. Let's see. Euro US dollar, please, again. Okay, I'll go over it one more time here very briefly. I'm bullish dollar. So the way I would play euro dollar is just to pull back into one of these levels here. The higher the better, obviously, because I want to short at a more premium price or the best premium I can get. And then I would probably target first level will be 1.15, then 1.45, and then 1.4. Or 1.14, sorry. Gold usually sleeps in May, August, so I'm not touching it. But let's see what what he says and stuff like that. I think gold is not really trading on seasonality. I think it's more trading on what's going on in the world, yields, right? So the cost of holding gold increases as yields go up because it's a non-yielding asset. So it's definitely, you know, getting pressured by yields. Yields across the board are elevated. So let's go ahead and look at that, right? Let's look at the 10-year yield in the US, right? It is up. This is the start of the time where the war started here, early March, right? And then look where we are at now. You can go down the line, right? Let's look at Kiwi right here, March, up. Let's look at Eurozone, right? Right here we started. Now we're way up. So there's a correlation with yields and gold. The higher yields pressure gold. So that's what's making this unattractive. Now I am very interested to see what happens here at 4,400 to 4,200, right? Because this is a very solid level of support. So I think there's two things that can happen. I think that you find some support here, and let's say that coincidentally that you get a resolution and you'll start coming down, or I think there's a real use case for gold. And I think that's very bullish for gold. Versus if you get right here and we start to stall out and we start to break down this level, you still have yields elevated and stuff like that, then I think you actually have a real possibility that gold starts to break down very, very low, very, very quickly. So this would be the line in the sand right here. This is a very solid level of support. I've said this before. This was once resistance, once, twice. We broke above, retested. We went all the way up to the all-time high. Then we crashed. We found some support there. We went up again. We crashed again, even harder. We found some support there at the 200-day moving average, along with this other level here. And so we're very close to that level again. So that 200-day moving average has creeped up here to 4,400. So that's kind of my thought process for gold. Silver, on the other hand, I'm not touching it at all. Don't like silver at all. Pound USD shorts, I think it's very possible, guys. So I when I say this, pound dollar, this is just my personal opinion, my personal experiences. I don't like trading the pound, man. I don't like trading the pound. It can like slowly grind, but then when it catches a bid, it catches a bid very, very quickly. So take this with a grain of salt here, but I don't like trading the pound. I prefer the euro dollar for other reasons. Like, for example, when you're trying to trade the dollar index, you can trade like a dollar ETF, right? That's one way you can go about it. Or you can trade the euro dollar, which the euro dollar basket or the euro dollar makes up the majority of the dollar index basket. So when you look at the euro dollar chart and the dollar index side by side, this is euro dollar. This is the DXY, right? It's very, very similar, almost 1-to-1, right? So when I'm trading that dollar direction, I would prefer the euro dollar, but there is a strong case for pound dollar. It's getting bearish reading on the EdgeFinder, so you do have that going for you as well. The only thing that I don't like about pound dollar is that you are in the middle of this range right here. I don't like that. You do have some solid resistance up here, solid support down here, but you are in the middle of this range. So I think, right, I think you can get a better opportunity if you get some kind of a bump up to here, and then you can short that. But for now, you are in the middle. You do have the 200-day moving average as well. So this could act as solid support or solid resistance. We don't know. And so because you don't know, you probably want to take the safer bet and wait for a bump here and then short it. So that's just my thoughts there on pound dollar. We got dovish news and DXY breaking. Yeah, we'll see. We'll see. We'll see. I think this is just one person speaking, right? Or is it a bunch of them? Is it just Waller? Let's see what Waller said. I don't think the Fed should consider hikes in the near future. Let's look at a probability. CME Fed Watch. Let's look what they're doing. Have they changed it all? Because the last time I checked, hike was priced in for December of this year. Yeah, still December this year. So probabilities haven't changed much at all. So we'll monitor that, of course. Any other asset classes that you guys want me to go over? I'll be more than happy to do so. Let's go over Kiwi dollar. Kiwi dollar does have a possibility of breaking down lower as well. This also may be one of the ones I like to participate in. Let's look at Kiwi. It's getting a bearish reading as well. So this one actually could be well. I like this one. This is solid support in my opinion right here. You also do have that 200-day moving average lined up within the zone as well. If you were to get a break and retest to this one, I think there's some real value in shorting the Kiwi. My first target would be somewhere around here. I don't want to shoot for the moon on this one. So my first target would be somewhere around here, which is 0.575-ish. So I'm going to mark this zone in neutral right here, or zone. Yeah, so I don't want to shoot for the stars on this one. I will target something like this. And then if you were to get a continuation, like a break and retest, then I would trail behind the structure. And then I would target the lower zone, which is 0.56. But yeah, it's a good idea on Kiwi dollar. I'll keep it in mind there for next week. I'm not going to make any trades on Friday today, just because I usually don't, and you never know what happens over the weekend, right? Something could change over the weekend. Maybe get some positive headlines. Who knows? I think there was a deadline at 2 to 3 days for the war to end, right? For Trump. Now I know that fluctuates, right? He can say 2-3 days, but then it ends up being 2 months. Who knows? But again, there's also just that volatility or that surprise aspect over the weekend if you hold a trade for too long. So yeah, silver's getting a bear score. I'm not surprised, man. I'm not surprised that silver's getting a bear score. I think that silver has a potential to look. Let's do this. This is a strong opinion, guys. Strong opinion. I think silver has the potential. I'm not even joking. 50% of this move. I think silver has the potential to be under 60. I think trading to 60 would be very, very probable. That's just my personal opinion. I think it could be a lot worse too. So I'm being very conservative on that front. But I think silver can trade to 60 or below. Sluggy, you love taking setups on Friday. Sluggy, are you like an intraday or do you hold over the weekend or do you hold over weeks? If your time horizon is a very long time horizon, I mean, I don't see any problem with taking a trade on Friday. I just don't do it, man. I just don't. But like if I were to get a pullback right now in dollar CAD, I'd definitely jump in. So it just depends. It just depends. I'm not getting any pullbacks. There's nothing very obvious to me. So that's why I wouldn't trade this weekend. But if it's obvious, I'll definitely take it for sure. Any last recommendations here before I head out here? I know I have someone else coming up here. And I don't want to check behind the scenes because I don't want to leak the link there. So James, if you could put in the chat whenever I think James is coming out, just let me know so I can just close this tab out and head out. But I don't want to link the StreamYard link. And one thing I will say, guys, I didn't realize this, but Memorial Day is this weekend. So there is a sale. Memorial Day, I think it's 30% off or 35% off. So I would highly recommend getting yourself a copy of the EdgeFinder. I promise that it would change your trading for the better. We also do have the Discord and Telegram for free as well. So free value on that front. We do our very best to deliver the best content. So definitely go ahead and check that out. I do have 1 more minute left. So at the 1 minute mark, James did confirm that James is there in the background. So you guys are in fantastic hands. I love listening to James. He can articulate a trade idea very, very well. So you guys are in good hands there. I'll go ahead and head out here. Okay, awesome. James is here. Have a blessed rest of your weekend, everyone. Bye-bye.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Ladies and gentlemen, hello, hello, happy Friday. Sluggy, you are right. James does know ball. Carlos, good to see you. Hope everyone's well. Hope you've all had a fantastic week. So, positions, short, Aussie, New Zealand. This is game plan for the next 6 months, maybe. We'll see. I'm not going to go too far into this one because there's quite a lot going on behind it. But I did put a video out on my YouTube channel this morning covering the idea and explaining what's going on. Basically, we've been talking about the idea that the Australian dollar is very extended, very crowded, so on and so on. I've been yapping on about that for, probably 3 weeks, maybe a bit longer. And then yesterday, I got a report come in from Credit Agricole saying they are now going short. They've recommended their clients go short. And I'm like, okay, let's pull the trigger. So I've gone short Aussie New Zealand again. That's not obviously the whole theory behind it, but there is that's the summary. The Nikkei, I am still sat in a beautiful long position here. I've trailed the stops to break even because my issue is the Bank of Japan. I'm just a little bit cautious that we are heading towards a hike, and then what the comments after that? Are they going to lean into a more hawkish thing? Are they going to hint to more hikes, so on and so on? I'm not going to deal with that. It's just whatever. It's nice and sunny. I'm not going to deal with nonsense. So trail to break even, just in case the worst happens. I need to see this level break. So I need to see these previous highs get broken above, retested, and then a continuation. On the retest, I might consider going in for another position and scaling in because my first position is already risk-free. Just recycling risk, no big deal. But yeah, so far, so good. Pound dollar. Okay, on this one, I'll hold my hands up. You caught me. This is Nick's trade. Nick added me to his Discord, I think last week or a week or so ago. And I saw it pop up. It was like quite late. I think it was like 8 p.m. And I was like, you know what? I'll jump in. Why not? So I can't take any credit for this. I do really like the idea. We spoke about this one yesterday. I said I quite like it short term. Longer term, not necessarily for me. I'm still not convinced the dollar is super bullish. But, if the one and only Nick is sending the signal, and I do agree short term, I'll just jump in. Cuts me some work. Pound New Zealand trade is not looking so hot at the minute. This one did start out really nicely. It was, perfect entry, almost. Not perfect, but close enough. And since then, it's just come back up. But it is what it is. I'm still sat in copper. This is a futures trade, and the same thing here for soybean. So sat long soybean. As I said yesterday, could not tell you why. Well, I could tell you why, but I'm not going to explain this one because it's not a market I'm very familiar with. My friend took it, one of my trades at Elite Traders, so I've jumped in with him. He's a very good commodities trader. New Zealand, pound Aussie. Still not convinced on this one. I think very similar to what I was saying on the Australian dollar. It's crowded, it's stretched. I think the fundamentals have also significantly weakened. So if we go to what's the best way to display this? Let's do Aussie New Zealand first, and that will show you a little bit of what I'm talking about here. So Aussie New Zealand has been getting a very bullish reading basically all year. This year so far has been so simple just by the Australian dollar. You didn't have to do anything else. That's all you had to do, and you would have made money. However, it's gone from being very bullish, almost, I think it was actually the top score was like 14 something. Anyway, not the point. It's now dropped off, and it's dropped off quite hard, quite quickly. So it's gone from being the most dominant pair on the EdgeFinder to now being -2. Now, obviously, the -2 isn't like the main thing. That's not the I'm selling because it's -2. I'm selling because it's had such a change. It's had such a rally. The Australian dollar is still very crowded. New Zealand dollar is crowded to the short side. So if the fundamentals are now flipping from being very bullish, even just to neutral, there is the argument there that we can have a mean reversion, we get some profit taking, we get some unwinding, so on and so on. This is also reflected on the AU economic. Remember, this was a hot commodity, not literally a commodity, but you know what I mean? It was, very bullish, and now it's not so much. It's actually looking quite bleak. So I think this is a really good opportunity to start unwinding those positions and actually taking the opposite side and fading some of the downside or upside we've seen over the past, couple of months. So there you go. That was a bit of word vomit, but hopefully you understood what I was saying. James, want to see AU yields breaking 4.554 on the 2-year. What are they at the moment? 4.6. I'm assuming you mean break below then, Sluggy. Oh, right, for AUD shorts. Yes, I agree. Simo, hello, good to see you. Good catch on the Nikkei. Thank you, Sluggy. I'm fairly sure you said you were in the same one, so you too. S&P 500. So yesterday we were looking at the S&P, and I pointed out, obviously in hindsight it was a bit stupid, but at the time it looked like we were creating a lower high. Hasn't quite happened, but what is interesting is maybe a double top. And again, I'm not trying to sit here say, every time it does something, trying to make a bear case out of it. I don't want to do that. But I am very cautious on the S&P. I got a headline come in from, I think it was Bloomberg yesterday. It might have been Bloomberg. I'm not sure. Financial Times or Bloomberg. It's one of the two. And they basically said, I didn't read the full article, but the idea was the reason that we've had these markets like the S&P, Nasdaq do so well is because the investors are using these as a inflation hedge, which is likely, and this is according to them, not my words, likely to be extremely painful. It's not a great idea. Obviously, it was a great idea during the move, but long term, it's not great. So eventually, we're going to see an unwinding. And that feeds into my personal longer term bias as well. So I'm just looking at this thinking, if I did manage to catch some sort of top, I think I'd be very happy. It'd probably be, a trade I could hold for the next couple of months. Gold. Yeah, I don't know. I see again, we spoke about this yesterday. I do see an idea for being a buyer of gold, but I do think it's still very premature. And I think Alan said he sees silver going down to around 60, maybe lower. I do think that's also possible. So I'm just not really that interested in being involved in metals right now, which is one of the reasons I liquidated my silver position. What about buying Euro Aussie? Let's see. Let's start fresh. Let's go monthly. Already, actually, it's looking like a strong yes. Obviously, not financial advice. But if my theory is correct, and we're now going to get the unwinding of the Australian dollar, this is a really good level to be in. So we've got this monthly support. We already had the rally to the upside. We've had the rally to the downside. This move has been completely corrected. And now potentially, I'm going to say fair value. But when I say fair value, I mean this in a very rough way. I don't have a fair value model per se. But what I mean by that is we've corrected this. This is now pretty much null because we've had the move to the upside. We've had the move to the downside. We're now sat in between the 50 and the 200 moving average. We're currently at a really nice monthly level of support, or just rejected, actually. So I would say this is a reasonable level to be involved in if you want to be a buyer. Weekly is technically still bullish, actually. We've got the 200, which is underneath the 50 moving average. Take of that what you will. I mean, some people define trends differently, but I use moving averages. And the daily and the H4 are obviously bearish. So I'm just thinking here, if you wanted to be a buyer, you've got two options. Either you just buy it and expect this monthly level to hold, or you take a more conservative approach, which is what I would do, and wait for a new trend to establish on the H4, wait for the moving averages to cross, and establish a solid bullish trend. I think that's the safer way. But again, depends on your risk tolerance, how aggressive you are, and how convinced you are on your own research. GPUSD shorts. Yes, I'm actually in GU shorts thanks to Nick, and it's looking beautiful. Honestly, full credit to Nick on this one. Again, I don't want to sit here and try and misrepresent it. This is from his Discord. It's his trade. I copied it. I've been a signal bot. But yeah, I wouldn't take it if I didn't agree with the trade. So I do think it's solid. I don't really have anything else to add to that. We've got a really nice level here. Didn't fully come into the fib, which is okay. I mean, I'm not going to overanalyze that. break and retest here. So we broke lower, retested previous structure on the left. We've come down into this support. Oh, sorry, expecting price to come down into this next support level. I think it's very bread and butter, very, very simple stuff. So I think even it's that simple, FX Alex G would even be able to catch that. Can I do DXY? Can it reach 105? I think it can. So I've taken quite a bearish stance, or not necessarily bearish. I've taken quite a neutral stance, slightly bearish on the dollar. And I'm kind of not sure if I want to stick with that idea yet too heavily. And that means I'm not convinced enough to go and short or do anything yet, really. However, if the Fed does stick to kind of what the markets are expecting, more of a hawkish tone, I think we've seen some pricing in of hikes as well, pricing out of cuts, hence US dollar strength. We've seen inflation coming up. I think if that idea sticks, we could very easily see the dollar start breaking above 100. And then, yeah, approaching towards 105, then where would this be? Yeah, around 107 to maybe 110. That would be my idea, but it really depends on what happens. Want to see euro dollar pop bullish on EdgeFinder? Yes, Sluggy, that would also be a good one. I don't know if we've got any. Yeah, we don't have any bearish Aussie dollar readings yet, but once that does, oh wait, Sluggy, there you go. I've just realized euro Aussie bullish. You know what? Maybe it's worth it. Yeah, maybe it's worth a go. So if I was to do it, it would break all of my trading rules. When I say all of my trading rules, I mean on a technical entry trading rules. So it's not a huge deal because I don't put that much weight on technicals. But EdgeFinder's bullish. We've had a massive drop. We've now hit monthly support. Just saying, you know, when the Australian dollar is crashing and euro dollar's flying and Aussie New Zealand's reverting, you know who to thank. I'm only joking. James, when Nikkei long and GU shorts were perfectly hedged in any environment, or wait, hold on. With Nikkei longs and GU shorts were oh right, okay, yes. That is true, actually, yeah, fair play. Yes, Sluggy, I don't know. I'm tempted. I'm really tempted to get in on Euro Aussie, actually. I think, okay, realistically, what I would do here, or what I'm thinking about doing, actually, now I've seen it on the EdgeFinder, is long position. I don't think I'd want to enter just here. So I'd probably wait for Monday or Tuesday just to see if I could get a slightly better entry. But something like this, half risk. So for me, that would be 0.5 to 1%. Normally I cap out at 2% risk per trade, and that's open risk. I'm happy to take, additional positions when I trail stops, but something like this. So stop loss just below this low over here. So let's for argument's sake, just to keep it easy, because most people risk 1%. So let's just say 0.5% risk on this one. And then we get maybe a lower price. I could add in another 0.5. I'm quite happy to add into losing trades as long as the risk is managed. It's not a problem for me. Or if we do get this continuation, I could then add in another 0.5 and round up the risk. Hopefully that makes sense. But yeah, I think this could be quite simple. Now, targeting these previous highs might be a little bit optimistic, so it might be easier or a little bit more realistic, at least, to target sort of this. So we'd be looking for the break and obviously a retest like that. I think this would be maybe the way to go. I'm actually going to watch list that because I really like the idea. Actually, hold on. Oh, yeah, that's fine. Blue. There we go. NXL. What is NXL? Yeah, I mean, I have no idea what this stock is. I'm not a stock guy, but if you're in, fair enough. Yeah, it looks like it's doing quite well. My soybean position is still entry, which is really frustrating. This is a really annoying position to be in because it's just not doing anything. It's very, very slow. Yeah, so I think that's it. I don't think there's much else to discuss, really, at least on my side of the markets. Pound Aussie. So as we were saying with Euro Aussie, I do also see upside for Pound Aussie, just not as much. I really dislike the UK economy, so I just don't think this one's really worth it. So actually, I'm just going to get rid of that. I'll put that one there. So yeah, Pound Aussie is completely off my radar now. Got no interest, long or short. Yeah, I think that's it. Let's go back to the EdgeFinder and see what's going on. Bear with me. Remember to drink water. So pound dollar getting a bearish reading of 8. Actually, I didn't even notice that. New Zealand US dollar. You know what? I think the Aussie US dollar could also be a fantastic trade to go long as well. So if we are, sorry, not long, I mean short. So if we are going to see the unwinding of the Aussie dollar, and we're going to look to see if we can get the US dollar regain some value, start breaking that 100 resistance level, I think this could be fantastic. The downside is the daily time frame is very bullish. So I think we then obviously have to rely on the H4 to flip trends, which it looks like it's doing. We're forming quite a nice downside here. So something maybe like this. This is really, really loose. There's obviously no fib or anything here, but just to visualize the idea, I think something along these lines could be completely valid. And I think this actually might be one of my top 2 watch trades at the moment. There's not really a clean area down here. I suppose there. This is obviously a really large target, but I see the potential. So I think this one's also worth paying attention to. Again, I'm just going to bookmark that one. So that's cool. So yeah, Aussie dollar and Euro Aussie, definitely to pay attention to. Obviously not signals or anything like that. Euro dollar is coming to the downside, to be expected. And dollar yen is still continuing higher. I think dollar yen could very easily get back to around 160. But the problem is, what happens at 160? Are we going to get yet again another intervention? Possibly. But the problem is then, it's just a case of cat and mouse. So we're going to see intervention at 160 or around 160. We're going to see buyers buying up at the lows, taking it all the way back to 160, and then another intervention to the downside. So, you know, what can we really do? Excuse me, hold on. I've got a really dry throat. Average return per month. Average is about 3% per month. However, I've actually recently started trading futures as well on my personal account. So this month I'm up 8%. So that's not sustainable, by the way. I'm not saying I can do 8% every month, but yeah, futures have been a massive cheat code to just boosting the personal account. Because the problem is, I was trading futures. I've only started trading futures this year, actually, but I was trading them on prop firms like Top Step, and I was doing quite well, but I didn't really like having to stick to the rules, and it was just a little bit iffy. Like I couldn't hold positions overnight on futures firms, so I decided to go towards personal. I used the prop firms to learn, make sure I could validate the strategy and the approach, and you know, without putting personal money at risk. So yeah, now I've moved over. Well, not fully moved, but I've integrated futures into my personal trading. It's been fantastic so far. Okay, so what else is there to look at? I don't really think there's too much. I know cocoa has been mentioned in the chat over the past couple of weeks. I don't really know anything about cocoa either. I'm not really much of a commodities trader. I suppose I'd separate that. I know more about metals as opposed to like the agricultural side of commodities, but yeah, I don't really feel comfortable sitting here and trying to give you analysis on things I'm not that well versed in. However, oil seems to be coming down, but it is still range bound. So when it comes to oil, I wouldn't really be looking to trade this. It's very flip floppy. I mean, you could look, yeah, for some sort of trend. Oops, that was a horrible trend line. Something like this, and maybe try and, you know, buy in on lows or sell highs and try and trade this sort of range bound move. But honestly, I just don't see the appeal. Yeah, oil is very, very bleak right now. And when I say bleak, I mean bleak in terms of the opportunities. I just don't see anything. What else do we have? Not too much. The Dow was topping yesterday here, and it actually seems to have broken. So yesterday we were looking at this previous all-time high. We were watching it reject here. However, we've now broken above. So if we are looking at this objectively, we've got excuse me, we've got a very obvious bullish trend. H4, what's going on here? Bullish trend on the H4 as well. So I think, and I don't want to buy, by the way. I'm just saying, if you were wanting to be a buyer, I think the most obvious thing here is a little bit of a pullback, just because the RSI is a little bit overbought. So just a minor pullback, continuation higher. Then I'd look to enter on a retest here and then a continuation higher. I think that's the most simple way to go. However, I don't really want to be a buyer. There's nothing on the EdgeFinder for the Dow either. So I think the best thing is just to sit away. Got to teach futures trading. I actually have a video on it. So let me show you something real quick. How long do I have left? I've got about 10 minutes. I've got enough time to just show you something here. Hold on. If I can drag it down. There you go. So this looks like a mess, but the idea is very simple. So it's just using VWAPs and trading fair value. So if I just put the execution marks on here, here. So yeah, all I'm using is daily pivot levels and fair value. So you can see here, I bought long right on the pivot there, closed out once we got to the 2.5 standard deviations of the New York VWAP, and that was it. So that made me about 1%. I don't take full risk on this. So it was a 2R trade, but I made 1% capital on it, or 1% ROI, whatever you want to say. But that's it. That's all I do, is just buy and sell based on pivot levels and according to wherever the fair value is at that time. So bounced off the overnight VWAP here, which is the yellow line, came into the 2.5 standard deviation of the New York, bought, and there you go. Simple. Obviously, you know, a bit more to it than that, but that's the concept behind it, and it works really well because all I need is, you know, 2 or 3 candles on a 2-minute time frame. I'm done for the day. Views on JPY. That is a good question, actually. Let me just take a very quick look at the yen. I just need to check my notes. I don't really have a clean outlook in my personal view, so I need to take an objective view. Hold on. If it wants to load, which it's not. Typical. The one time I need the notes, it doesn't show. Anyway, whatever. We'll move on. So yen. I think we are going to see the yen kind of a little bit of a trap. So the markets are pricing a hike from what I've seen for the BOJ. But as I was saying earlier regarding US dollar yen, it's more a case at the moment. What we're seeing is just ping pong. It's just a game of cat and mouse between the MOF and traders or investors. So, you know, the market or dollar yen is getting to this 160. The MOF is defending 160 with these interventions. Then traders are just buying up back up. So really, until we see something happen, whether it just requires the BOJ just hike rates, and then, you know, that's cool, and we can continue seeing upside, fine. I don't think we're going to see the yen necessarily become a dominant currency in terms of, I think it will still be a case of buying dollar yen and benefiting from the carry trade. However, the carry advantage will lower, obviously, as the BOJ does hike rates. But yeah, I don't see a world at the moment where the yen suddenly becomes massively strong and everyone's buying yen, selling dollars. But yeah, that's just my view. But the yen is not a currency I pay that much attention to be perfectly honest. I take a high level view, but I don't look into the day-to-day stuff for the yen. Anyway, let's get back to here. So I wouldn't want to sell silver. I'm going to stay away from that one. What else do we... Actually, let me just double check times. Okay, so Tiger is coming on in about 7 minutes. Cool. So silver, I wouldn't want to sell. CAD Swiss has been on here for a while, but I've not done anything with it. And it seems like it's been a good call, but we have been looking at it. But yeah, it's just not something I'm overly interested in being in. Monthly time frame is bearish. Weekly's bearish, daily's bearish. The H4 is a bit too choppy. So this is why I was sat away. Because although we've got higher timeframes that are really bearish, we're just not really seeing any developments here on the H4. So there's nothing really for me to trade. So I think what I would need to see here is a very clear move lower, break these lows, establish a cleaner bearish trend, and then look for a pullback to enter on, and then let this market go lower. That's really all I could see, or all I could really say at the moment. So like over here, you can see we've got a bit more of a clear downtrend, but then when we scroll here, it's just horrible sideways chop. So yeah, in my view, BOJ hiking. So what other central banks are hiking, pricing hikes too? Yeah, Sluggy, I agree. Views on GBP AUD. So the problem I've got with this market right now is I would say we're coming into a point where we've got a weak pound and a weaker Australian dollar. So over here on the left, we had a very dominant theme by Australian dollar, as I've been saying. And that was also benefited by the weaker pound. We've got investors that aren't really wanting to hold pounds. Anyway, we've got a whole different side of the story on that one. But now it's a case really that the Australian dollar's not in a landscape where it's really got anything to do. So we've already had 3 rate hikes. And it seems like they're more leaning towards a pause now. Hold on. And as we can see on the Australian dollar heat map, again, there's just not really that much there. If anything, it's more bearish. So you've got 28% reading or 28.57 reading. So nowhere near bullish. But then, actually, I'm not sure what the UK heat map says. Yes, the UK is 50%. So if you wanted to just trade the EdgeFinder sort of differential, it does lean more towards being a buyer. But fundamentally speaking, I just really don't like it. So I think the best port of call, in my opinion, is stay away from Euro Aussie. Stay away from Pound Aussie and look towards Euro Aussie for longs. I think Euro Aussie's got a little bit more hope. But I need to be clear. When I'm saying that, I'm not saying that Pound Aussie can't go higher. I do think it will go higher. I just think I personally prefer the idea of being a buyer of the Euro compared to the Pound. So yeah, that's the rundown there for you. Not to be. Hello to you as well. I'm not sure if that's what you meant, but I would assume so. Bitcoin, S&B at near zero inflation, still pricing hike at the end of the year, just goes to show the severity of the current environment. Yeah, I mean, to be honest, I'm very concerned about the Canadian economy as well. I think Canada and the UK, I would say, are in some serious trouble. I know a little bit less about the Canadian economy because I don't live there, but on paper it doesn't look great. The UK economy is also very, very bad. So I think there's definitely opportunities. I want to say this, it's difficult to express as a short-term trader. Long-term, I think it's quite simple. It'd just be a case of selling the UK and Canada. But short-term, obviously, we've got to pivot with headlines and short-term relative strength and things. So it's not as easy. But I think as an overall bias and overall theme, selling the UK, selling Canada is a really pretty good base case to go with. Anyway, Bitcoin hasn't really done anything since we spoke yesterday. So what we have been watching over the past week, I would say, was this 200 daily moving average. So it's looking like we are breaking below the 50 moving average as well, which leads me to think we're going to go lower towards at least this sort of what's this called? The previous range that we had over here on the left. So around 70K, we could come and see a bit of a retest of these highs and then a pop higher, or this could be a case where we come all the way back down towards 60 and start creeping our way down even lower towards 50K. Just again, I always say this, but just to be very clear, I'm not a crypto guy. I'm not involved in Bitcoin. So please do your own research on that one. I don't really, it's not my bag of tricks. What was COT data released today? That's a good point. I'm not sure if the EdgeFinder's got it listed, but let's see. Last update was 15th. No, so next update is in 5 hours. So we will get the next COT data released tonight for my time. Yeah, Sluggy, I've seen that as well. Yeah, it is quite compelling. Okay, sorry, I was just reading something there. Okay, so actually, it's funny we say that. Canadian dollar's getting a bearish reading. Didn't notice that earlier. Pound New Zealand's bearish. Pound dollar's bearish. Sweet. So I'm in both of those positions, so we're sitting quite comfortably. Euro yen, dollar yen bullish. Dollar CAD bullish. Dollar CAD could be an interesting one. Let's take a quick look at that before Tiger comes to take over the show. So, really nice trend on this weekly time frame. Daily time frame, what's going on here? Daily looks like we're popping out of a bearish trend actually. So weekly and daily is becoming a little bit more aligned with the weekly. The H4 looks really nice. So actually, I think there is a good opportunity to be a buyer of dollar CAD as well. RSI is a little bit overbought here, so I want to see a pullback towards the 200 moving average and then a continuation higher. So if we got a pullback here towards the 200, a nice rejection, whether it be a bullish H4 candle close, an engulfing candle close, so just something to show me buyers are still in the market, I think I would be quite happy to actually just be a buyer at that point, and then let this market continue to run at least back into these highs. So maybe something like this, and this might be a little bit optimistic, so let's just drag it a bit higher. Something along these lines, I think, is pretty simple. So again, take profit at the previous high, stop loss just below the 200 moving average on the H4. Very simple stuff. So that's the idea. And again, actually, I'm going to bookmark this one. I quite like it. There we go. Anyway, ladies and gentlemen, gamblers and traders, I have to head off. Tiger is coming to take over the show. Enjoy your weekends. Enjoy the rest of your days. Thank you for being here. And I'll see you all next week. Stay safe. Don't get margin called.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Friday. Great day by default, as always. On here to kind of close out the show for you for the week. So we can go have a nice, peaceful weekend, relax, maybe do a little study, and get ready and do it all over again next week. It's a cycle. Sometimes it's a vicious cycle. That's kind of where we've been geopolitically right now. So still pretty much in that wait and see mode. Obviously, if you guys saw the news, looks like Pakistan did send their finance minister, I think it was, to Iran. So as always, guys, as soon as that happens, you see some of these markets spike. Okay, people are looking at any little headline as an excuse to go out and buy the market up, the risk on type moves. So just be careful with that. As always, kind of like yesterday, we did get that little bit of good news as well. So got to get some follow through with this stuff. We sound like broken records every single day coming on here and mentioning that, but hey, that's just the environment we live in. We don't always like it, but this is where we can figure out how to adjust and get better and be better than the situation, right? So it'll be nice, though, when we do get it over, get back to the hard data, the stuff that actually matters. So anyway, guys, let me know in the chat if you have any specific tickers you'd like me to check out. I did kind of update all my alerts over here earlier this morning, so we can definitely take a look at some of these. And definitely check out Ola Prime, guys, if you're looking for another prop firm or a new prop firm or just a brand new one, different one, whatever. Nick does, of course, have his 35% off code, QR code there on the screen. You can also use the manual code A1Live on olaprime.com for the account of your choice. So with that, oh, wow, I guess yeah. So I was actually cautioning some people. I was doing some other work earlier talking about, guys, let me shut my window. They're cutting grass outside. Sorry about that. They just had to start cutting the grass outside of my bedroom window as I got on with you. But anyway, yeah, so the Nasdaq, or not the Nasdaq, I'm sorry, the Dow Jones, just looking at the broad index, it actually broken through and finally broke the highs from February 10th. So, guys, this is where you're going to have a lot of breakout buyers. And really the caution here is to pay attention to some sentiment. Okay. And I kind of, I pasted over here, but just having a look at the sentiment of the Dow Jones, we're now down in some high call volume. So it's kind of going against really the smart side of buying a breakout. If that's what we're getting is high call volume in the options market, that's a very, very bullish sentiment. Okay. And the same thing with the retail sentiment. This is where our sentiment analysis kind of comes in. So just be aware of this stuff whenever you're trying to, buy strength, buy into strength. If I can find it over here, crowd sentiment, retail sentiment. And you see at the very top, look at that Dow, very top, 93%. Okay. And then you couple that again with the put to call ratio. And this is where sentiment analysis becomes very valuable for us. And again, this is something that I don't see almost any other channels talking about except for Nick's channel and those of us here. So there you go. There's your up-to-date look at the call volume. So just be careful. If everybody and their uncle is bullish on something, okay, if the shoe shine boy is telling his clients to go buy this or go buy that, just run for the hills because it could potentially get a big drop the opposite way. The banks, the institutions, they know where that liquidity is at in the form of their stop losses, and they love to go attack that stuff, okay? So not saying it's going to drop. It could very well shoot up even higher, but just be aware of that when you're trying to make buying decisions on some of this stuff. So as far as the top setups, I wanted to go through, and again, guys, let me know if you have any specific tickers, but I did kind of go and draw out some trade ideas that I was keeping an eye on. Looks like the most recent alert I added was here on CAD Swiss, which again is giving us a -5. So just barely tall enough to ride. And you see, I did have a zone I drew up here. Now, I was originally interested in this zone inside of the daily up here, but we didn't quite get there, did we? So talking about this dinky little, I think it was a 30-minute. Yeah, it was a 15-minute. So this was that 15-minute zone I told you guys about earlier in the week. I was interested to see if it was going to bounce into. I told you I didn't really like the fact that we just had the one bearish expanded range candle coming out of that before we got lazy and retraced a little bit. So I didn't quite see the picture, but guess what? The daily traders actually so far have won out on this, the daily zone. Okay. The 1, 2, 3 candle zone, if I draw in the full zone there, which is what ideally what I like to see on any time frame, 3 candles or less. So the daily has won out. You see, we bounced into that zone and we've just had a big, strong decline ever since. So the question now is, how can we look at this as a second chance opportunity? Well, drop it down to a 4-hour chart. You can see I didn't draw the 4-hour candle. I was more interested in the 2-hour candle, but this would be our 4-hour look. Up here, obviously in the zone, again, would be another one, but I'm kind of curious to see what we had on this area. So I ended up drawing the candle like this. If we get a push up into this area, this could possibly give us a little bit of resistance to the downside. The volume spread analysis candle did kind of grow a little bit and just kept going and broke these structures. So this is one option, and that's why I have my alert there. But I think the better option is probably going to be up a little higher. Obviously, the origin of the overall strong move. But the only downfall to this 4-hour zone that is up here, I just didn't draw it in. The only downfall to this is the fact that we've got 1, 2, 3, 4, 5 basing candles, guys. That's just a little too many for my blood. Okay. You had obviously your leg in, and then your 5 basing candles, and then your leg out. Ideally, I want to see 3 candles or less. So I'll leave that drawn up there, but the reality is I'm going to discolor it. I'm going to lighten the color. This just helps me to know that, hey, there's something fishy about it, something that I don't quite like. Okay. So we've already obviously touched and mitigated the daily, so I'm just going to lighten it as well. Again, it just tells me it's already been touched. There's some issue with it. So that's going to be, I rarely don't like the origin zone, secondarily, but I do think I like this one down here the most because it broke these structures pretty quick. This one here, especially if we go down to some smaller time frames, that picture just becomes a little more clear. Okay, so we broke there, broke there. So I'm going to keep my eyes on this 2-hour supply here. Where we did have a pretty decent spike of volume out of it for going into next week. Now, if this waits till Sunday night or Monday, I'd be a little more happier about it rather than going into the weekend and trying to hold a short on this thing. So that's my goal. We'll see how that trade opportunity works out and obviously monitor EdgeFinder to make sure it doesn't go anywhere doesn't go back to neutral. So that was my look on that. As far as Euro Aussie, keeping an eye on this zone down here on the bottom. Now, I got to be honest with you guys. We have not got a turnaround on the daily yet. As you can see, our 8 EMA is still below the 21. It is trying to turn around. That's the alligator trying to close its mouth, but it's not quite there yet. So I got to be honest with you. I drew this up as a zone down here, but it's going to be a very, very – I think it's going to be quite an aggressive opportunity here, guys. I wouldn't recommend necessarily anybody jumping on this, but the idea here was, and I think that was a 30-minute – yeah. This was a 30-minute look, and this is something I actually drew up. Okay, talk about this zone over here. This was something I drew up before we had bounced into this overhead supply that you see over here. So this may just totally negate it. This over here should really negate it, though. It's a downtrend. We are in a discount area because if we look at our swing low over here, our swing high over here on the higher time frame, that's our curve analysis look. We're obviously in the bottom third section, which is our discount area. And really, the other idea behind this is if we take a look over here on the 4 hour, well, we broke some structures to the upside. Okay, so we broke this structure here. We obviously broke the supply zone that originally, remember, we were looking at as a bearish signal about, 10, 12 days ago or something. So I left. This was originally a point to short this market. And but now that the fundamentals and the sentiment, everything have swung around to the bullish side. Now the goal is to take that same zone where I was trying to short and actually chew through it so that I can see some underlying strength somewhere down here. So that's what we ultimately got. And that's the only reason I'm really kind of paying attention to this. Again, I think this is a little probably even too advanced for me, to be quite honest. But the bottom line is we did break a structure to the upside or a change of character. The impulse leg, right? And if I draw that in, obviously it's going to look something like this, right? So that's our new impulse leg. So that was the whole idea behind seeing if we wanted to if I wanted to take an aggressive stab down here or not. I've got the alert there. I'll see what happens if and when price drops in. If Euro Aussie happens to give us a little better of a stronger look on EdgeFinder than the +6 that we have, then that might be a little bit of an opportunity, even though I still think we'd be a little bit on the aggressive side because our moving averages just aren't matching up well over here. So that was Euro Aussie. I was looking at silver, which is on our bearish list as well. I'm not quite fond of this. I do like that my moving averages did cross over here, but if we kind of drill in on the 4 hour a little bit, we did bounce into this demand that I had drawn up down here. And we've since retraced. This is probably going to throw a wrench in this trade idea up here because you guys see I got a zone up here on a 1 hour chart. So I drew that up when price was still in this area just to see what would happen. The idea was to see if when price does come down to the demand, if we could break through it. And then confirm that this would be a new impulse leg to the downside because it would have broken this structure, which it did. Problem is, it wasn't strong enough to chew through that underneath zone. So at this point, this idea is probably going to be out. Okay, that's probably going to be a no-go at this point. And that's why I drew up this little projection line over here to really kind of get a little bit of a different idea. Ultimately, I need to break through the rest of that demand and then look for a retracement up in this area because this would kind of turn into a new impulse leg right in this area. So that would obviously look like this. Okay, that's the impulse leg that I personally want to see. And then not to mention, got to have somewhere in this area where it creates a new supply zone to short in. So, but the bottom line is it really kind of changed my thinking just because we tapped into the zone but did not break through to it. So hopefully that makes a little sense there. And then if we do this and then we do get a push all the way up to the supply that I was originally interested in, then yeah, we could look at that as well. As long as it screams up rather quick, but then kind of slows down and consolidates and starts giving us some manipulation to play with here, liquidity, guys. So anyway, that's kind of the look on silver that I'm keeping my eyes on right now going into next week, because I don't think we'll have near enough time today to have all this work out in our favor. But you never know. Hey, it depends on if we get another headline. If we get another headline, very well could, good or bad. So dollar CAD, which has been on our list, that's given us a +6. And then over here, basically what I was looking at, and number one, okay, trend looks great. EMAs look great. Alligator's mouth is opening to the upside. That's what I like to see, ladies and gents. So pretty strong push up of late. But what I was keeping my eyes on, and I may have to redo this. I may have to see if we can find something up in this area. But I drew this down here yesterday, and I was keeping an eye on this on a 30-minute perspective. So 30-minute candle, 30-minute zone, gap out of it. And then obviously from here, it just kept on and broke these structures. So that's kind of the look on dollar CAD that I originally had before I went to sleep last night. But in light of these newer highs that we've got, and here you go, you can see exactly what my thinking was. Okay, from wherever price drops, especially if it comes in hot, I need it to slow down and start basing out a little bit so we can get the manipulation game going a little bit. Okay, so that's my thinking on what time frame was that on? 2 hour. Trying to get my, yeah, there we go. That's what I was trying to do. Get my basing back up here. That looks more like it. So scream down, consolidate, test liquidity on the highs, test liquidity on the lows, which is our spring, and then bounce into the unfilled orders to take along. And that still rings true, even though I drew this up, like I said, somewhere over here, I can't remember. But point is, that still remains an idea if it happens to come down. So not much more really to say on that. This little bit of a swing low had no volume spread analysis activity, so I'm not interested in this area. If we wanted to be ultra aggressive, and if this candle closes up higher here, well, we got a 1 hour candle trying to form right in front of us. Now, this is an incomplete picture because we're still currently building the candle that we're on. But let's just assume it closes up there. 30-minute, 15-minute, okay? So 15-minute, we got a 15-minute candle here with a gap. So this is a little bit of a smaller time frame confluence, okay? A little bit of a smaller time frame confluence. But again, I need the 1 hour candle to close somewhere up in this area first. And that obviously needs to be green. Okay. So again, incomplete picture. If we get a close up here, then this idea, again, on the aggressive side, more of an intraday trade, because we're down on a 15-minute time frame looking at this candle here, might be a possible opportunity. As always, guys, do your own due diligence on this stuff. Not financial advice. Okay. Just showing you some thoughts, just showing some ideas, for what we're paying attention to, what I'm paying attention to. So that's probably the best thing I got on dollar CAD. I'm not even going to leave this candle here until it closes. So I'm just going to delete it so I don't get tempted. I'll leave the line there since that represented that 15-minute though, because that is actually a good one. Pound dollar, which has given us a nice bearish look, -8. This is our strongest asset that we have right now on the EdgeFinder. So looking for a possible short over here. Daily side over here, broken this major structure on these candles here. 8 EMA is comfortably below our 21 EMA. Alligator's mouth is pointed to the downside. So basically looking at this as far as this red candle here, where we had a gap coming out. Didn't really have a whole lot of anything up here except for a cluster. A big old mess, guys. I don't know. What does that look like on a weekly? Okay, so yeah, on a weekly, it looks a little better. But remember, we're still in the weekly candle, so it's not closed. And that candle, in all honesty, that weekly, didn't even break a zone, demand zone below. So how much faith do I want to put in that as a weekly candle? I really can't. Just got to look at it in the course of a daily and, not look to take 1,000 pips on this thing. Just take a little bit. So that's our daily look over here, pointed downwards. 4 hour time-wise, if we can turn my drawings back on, that same daily, I've got a 4 hour candle inside with a gap showing the inefficiency in the market somewhere in this area, probably right there at the zone. It's not the sexiest looking zone. It's not like I have a green candle up before the big drop, which is like a typical way I want to see a zone, but it is still a consolidation zone where supply clearly exceeded demand, because otherwise we wouldn't have gotten this gap. So I'm going to keep an eye on that. I got an alert there, 134.95, which is basically the 135 psychological number. And oh, by the way, I've got a former support resistance line, that blue dash line, going through the heart of all of it. So I just feel like that might present an opportunity, because we do have quite a few odds enhancers kind of lining up in our favor. And so why the heck not? We did get a big, strong push up, and then now we're starting to base out. This is what I like to see. Big, strong push up, slow down and base out so that we get that liquidity play on both sides. It's going to create buy orders up here from these shorts that are trying to push price down. It's going to create sell orders down here from these buyers that are pushing price up. So this is a fight, and we're getting liquidity on both sides of this thing, okay, as we speak. So all I'm asking it to do is just keep doing what it's doing. Come up, give me a little jump into the, not only the daily zone, but the 4-hour zone, the former support that we had. The 135 psychological number is there as well. So we got all kinds of confluences here marrying up to give us a possible short down to this area. Now, if I were to short this, I definitely would not want to take it blindly to the bottom. I would want to be aware of this supply, the demand zone rather, that we've got over here. So a buy to cover spot would probably be right about that area. So I give you a pretty good 120 pips or so on a pound dollar short. As always, guys, do your due diligence on this stuff. Yeah, ATR 90 pips. So realistically, if we bounce in there and grab those unfilled orders, realistically, I would have to expect, well, it'd probably take a couple days or so to get down there. Because our pip count from proximal line to proximal line is 171 pips. I just said the ATR was 90, so 918, yeah, right at about 2 days. I would have to expect it would take a couple days to drop. Bearish signal on the most bearish signal on the EdgeFinder, coupled with unfilled orders and all kinds of confluences. I just really like that 135 area. What do you guys think about that? Let me know what your thoughts are on it. Let's see here. So that was pound dollar. Let's see, what else did I have for you guys? I thought I had one other thing written down. Check my notes. Yeah, Pakistani army chief on way to Tehran. That was a big headline we had. See if we had anything updated. University of Michigan sentiment looks like it is out. Wow, they went down even more. Under 50, guys. Under 50 and got even worse. So not a good look. It's just not a great look. Not a great look. Now, the good retail sales numbers for Canada, so that was a little bit of a welcome sign for them, because they were at the very bottom. So let's go see. It's probably not updated yet, but I do want to double check the retail sales numbers here. Yeah, remember the last period was bearish. So this will definitely put the Canada dollar back over the 50% threshold. So welcome sign for them over there for sure, just north of us. Our loony friends. What else did I have? Let's see, double check over here. Nikkei popped on our list. How about that? We ain't looked at Nikkei in a while, have we? And I did look at it a little bit earlier, and I don't think I left an alert because I don't think I really liked the picture. Guys, you probably hear us talk nonstop and sounding negative about this, negative about that. It's not that we're negative. It's just that we're extremely cautious. I don't know. Do you guys get tired of that? You know, at the end of the day, we've been burned in many ways. So the whole point of us streaming is to not only give you ideas, trade ideas so that you can formulate your own opinion, but our job, our role on here is to be real with you, right? It could sound kind of rough at times, but hey, that's basically what our job is here, is to straight up caution you about all the landmines that we've had hit us, you know, in our past. So anyway, I just say that to say it's not always sunshine and roses in the world of trading. We have to look at things with a contrarian look at all times. So anyway, as far as the Nikkei goes, got a couple zones over here. Got one down here. Actually, what does my daily look like? Okay, so daily's looking good, higher highs, higher lows. ADMA is curling back to the upside after coming down. Okay, we had this big price drop right into zone of demand. How about that? What did the zone of demand do? It pushed it back up. So at this point, I drew up over here on the left. I really need to see, I prefer to see what that green arrow is telling us. We got a double top. We're in a zone of supply as we speak. It's more of a minor supply because we didn't really have a lot of volume. But the point is, really want to see a break and close up here first. Break this double top, break these this supply zone here and close, and then retrace, guys. I got a zone down here that's not the strongest. I think this zone, this return all the way to the origin of the overall strong move up might actually be the higher probability one because there's just not enough volume in this area. That's diddling in the middle. That is also, by the way, ahead of a former resistance. I don't like buying zones unless they are below former supports or resistance lines or former resistance in this case. Because people have a memory. People remember that. Those traders that were over here, okay, they're seeing this price drop, looking ahead. That's why I always map these things out. When I see those things go through my zones, I love it. When I see it go below my demand zones, I don't love it. So that's why I don't really like this zone up here. I'm just going to color it light green, tell me to warn me. But again, I drew it up because it had that gap right there. So very, very well, it very well could catch a bid and fly up. But I think the highest probability is a return all the way back to the bottom, which is below these two former resistance lines. Okay, another one over here. This one here. See, this is the big difference with this zone of demand. And this one here is the location, guys. It's just like buying a house. Location, location, location. Where are my zones in relation to all my odds enhancers? The support and resistance lines. Okay. It's key. It's very key. Am I getting a discount or am I paying a higher price? Am I diddling in the middle or am I waiting for the discounts? So for me, that's really the picture that I would require in order for me to get excited about the Nikkei alert that we have right now. This must happen first, close above the tops. Okay, so that's a little bit of look on that. And refresh my screen real quick. That is a look at that. Let me just get it. Okay, so yeah, I got a couple more minutes left over here, guys. Euro yen, dollar yen. Yeah, we had the dollar yen look up there as well. We did bounce into that very minor zone of demand I was eyeballing yesterday on that small time frame. 1 hour. Yeah. So remember I was telling you guys about this zone I was maybe keeping my eye on if dollar yen went to bullish. And sure enough, we got the bullish signal. But all the while understanding that in the grand scheme of things, this is just one big sideways cluster. This is a retail chop zone, guys. And this was an aggressive, admittedly aggressive look if we got a bullish signal. Well, we did get the break of structure. So that was part of the good news with this. But then coming down into the zone, guys, and this is what keeps us safe. When price enters our zone, did we get any type of resistance or support, I should say? Did we get it, or did it just saw right through the zone? See, this is why, especially high on the curve like this is why limit orders are out of the question, okay? Got to look at it on a little more of a market order type idea. And even going all the way down to a 5-minute, this also would have kept us safe, is seeing all this strong volume coming in, this volume spread analysis. There's a lot of institutional look to that, okay? So I don't want to get in the way of that. And we never even got a break of any of these candles. Okay? The idea, even on a 5-minute, would be to buy the breakout of a bullish candle. And we just didn't get that. Okay, that would have been our first bullish candle. And did price break it, or did it break through the rest of the demand first? It went down. Okay, so this is what keeps us safe. This is what keeps us from needless losses, is breaking down, coming down to some smaller time frames. And looking at price a little more in depth to actually see if we're getting a buying signal Are we getting a bullish engulfing candle? Are we getting a candle with a big wick underneath? An inside bar, okay? Break out of that. Is volume starting to step in on a bullish candle? We just didn't get that. So, yeah, I watched the zone, but I also watched it just go right through it. So it kept us safe, guys. I ignored it. And I think when it actually came down here, it wasn't quite on the bullish list anyway. It was still +4. So it would have been safe either way. But that was the look on that. And I think that's probably about all I had over here for you guys. Still in that pesky meta trade. It's just dicking around and going sideways, ladies and gents. I got in this trade back on May the 5th on Cinco de Mayo, and it's just been going ever since. So that remains my sole trade. I'm sticking to the guns about waiting for price to push up here. If it does, if not, great. It's not really tying up a ton of my, capital. So it's not like it's a big deal. But 100K account I started with on this challenge account. I'm up to 101,925. It should be bigger, but at the end of the day, I'm super busy throughout the day and I'm missing a lot of signals, guys. I'm spending more time helping other people with looks than I am my own trading. So, but hey, plus 1900 is better than minus 1900. So I'll take it. All right, ladies and gents, that is the end of the show. Do stay safe. Read you a book over the weekend. Get you some hours on the charts, whatever the case is. And then we'll be back on Monday to do it all over again. So with that, take care, trade safe. Have a nice Friday.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.